Welcome, Robert Stanlick here with Rocky Mountain Wealth Partners, and I want to give you a tease on what I'm working on for 2023 when it comes to market updates. I was getting a little frustrated just showing S&P, the Dow, the NASDAQ, maybe a mid cap in there, because that doesn't tell you how your portfolio is affected. So what I did was I used some of the Dorsey tools that we have available, and I put together a major index style. And these are the ETFs from First Trust. We've got a broad selection from large cap value to multi-cap, mid-cap core, dividends, capital strength, again another dividend, but this is from Value Line. And that was the other thing I really liked about using these First Trust is they have different strategies that they pick up from other investment firms. I mean, they use Dorsey Wright, they use Value Line, they use Morningstar. So we're getting a better selection of ideas all within one system. It's ETFs that I use. We use them in strategies. I use these a lot to help understand what sectors to be in different annuities, those types of things. So we plug in their 17 ETFs in here, and this ranks them from how each one is doing compared to the other one. So right off the bat, if you take a look here, the First Trust BRIC Index only was outperforming one of the other 16 ETFs, where large cap Value Opportunity is outperforming 15 of them. So you can see where the strength is. The column of X's is basically a ranking of how well they've been moving up. And I specifically set these for a little quicker response time so that we can see what's happening maybe in a week to 2 week time frame. We can see movement. Then we go to the technical attribute score. This is a longer period of measurement based on Dorsey's 5 areas, and I don't want to get into all of them, but it has to do with relative strength and how their chart looks and all those different things. And he ranks them from 0 to 5. So typically with ETFs, 4 is about the highest that you get just because it's an ETF. So that gives us a longer perspective of which one's been hanging in the longest. And then we can look at the relative strength schedule and say, yeah, this guy's got a pretty good score. This one's a little bit higher, and it's still in the number of buys, but it has slid a little bit in the last probably 10 days. So we can still feel pretty comfortable with this. Where I kind of draw the line is I like to have a technical score above 3. So I probably would kind of skip over this one. And then again, we've got dividend at 4.14. We've got First Trust capital strength at 4.5. So those will be what I would look at, and then actually use the modeling program that they have to combine these two to tell us which of the top 5 are the best ones to invest in now. So what I want to show here is how are things doing on a short-term basis and how are they holding up a long-term basis. And it's probably easiest to show the BRIC. It's only beating one other ETF, and it's got a really weak score, in fact the lowest score at 1.64. So now let's pull the top 5 rankings out of here. And like I said, the mid-cap core I would probably jump over. The same with the First Trust dividends, just because the scores are low, and in this particular case moving down. So let's look right off the bat. Large cap Value Opportunity, as we mentioned, that's this chart through this morning, and you can see it had a pullback, but it's got a nice base here. Same with the mid-cap value. Pullback has a base here. Then when we get to the dividend leaders, It's pulled back a little bit more, but again, has a strong base here. So we're seeing these sectors all kind of moving along the same way, and what they have in common is value, because even the core mid-cap core ETF is a core of value and growth, dividend leaders, dividend strength, value opportunity, value. So that jumps out at the screen that says, okay, that's where the market is going right now. Those are the top 5 ranked according to Dorsey. So I want to look at those. That gives me a quick snapshot. Then we can also go back and say, all right, over the past 10 days, what movement have we had? So if we take a look at the FNI, the China ETF, it's moved up 4, and this is probably with last week China came out, was talking about reopening. The casinos that are in Macau had huge weeks that probably drove this number pretty good. And then the capital strength ones, these are extremely well managed companies with high cash positions, low debt, made to weather bad and good markets. But I think what really sparked them was the fact that the dollar has been dropping. So if you're a U.S. multinational and the dollar is dropping, you're bringing back from foreign countries more money than when the dollar's higher. So their profits should start to look pretty good in the first and second quarter of next year. Now, we can look at the same rules on the sector play, and energy again through December 9th came in number 1. Biotech was 3rd. This is kind of interesting. We saw that on the major indexes too. Then natural gas, materials. Financial came in number 11, and that is kind of fascinating to me because with higher rates, banks' profits should continue to go up, and it's got a great long-term score of 4.89. So if we take a look at the energy, and this is a great buy on the dip program, came right back to this support level, still trading above the 200 moving day. It lost the 50-day about a week ago, but this could have real strong potential based on the news that Saudi Arabia wants to join the BRICS. Brazil, Russia, India, China, South America, them, Turkey, and someone else want to create their own currency, and Saudi Arabia, basically thumbed their nose at the United States, says we're not going to allow you to push us around with oil. So this, I believe, is going to be a strong play continuously until we come up with better relations with Saudi Arabia and the rest of the world. I don't believe the currency shift, because even if gold is the backing of a new currency that Russia and China are behind, is anybody going to trust them to actually give them the money that they owe, or if it defaults, give them the gold? Here's the biotech, broke out of a nice base, pulled back, and in the good old days of doing radio back in the day, this is the handle part of the cup and handle starting to form. So if you're familiar with William O'Neill, that can get you a little bit excited as well. Then we look on this one going back 10 days. FXC is the materials. We've got, that is the strong play again, right to the 50-day this morning. It's holding it. If it can bounce, that could be a very positive signal. You take a look at some of the others. FXR and RBLD are industrial, infrastructure, producer ETFs. And I don't know whether this has to do with the Build Back Better thingamajig or whatever they have, but they're actually going to start using some of the money and all those pork bills to actually start building stuff, and people are getting excited about that. We've got the biotech again, but those losing steam, FTXO is the NASDAQ. These are stocks that are on the NASDAQ that are in the transportation index. And man, you can see they took a hit. And I really can't put my finger on that because energy prices have been coming down. That should be strong. But again, if we would stick with the top 5, 6 strong things, we wouldn't be invested in this anyway. FXU is utilities. It moved down. It only moved down one, so you can see it hasn't changed much here. That's kind of the safe haven, hoping to get a little bit of a dividend. But at this point, I would probably say it would be a hold. So I'm trying to keep these fairly short, but insightful to see a little bit more sector, a little bit more market, intermarket strength in there, and give you just a quick glimpse. I would love your comments back on these to what you think. If you would like to see something added, let me know. The number to call is 719-400-6516, or you can email me at robert@rmwealthpartners.com.